There are a lot of queries in the minds of retail traders and investors on what to do with Zomato shares after its stellar listing. First of all, few points I would like to discuss about Zomato in light of its fundamentals and future. Of course, it's one of the top internet companies which has successfully transitioned from being a startup to well-established business. Together with Swiggy, it holds almost duopoly in restaurant aggregator and food delivery space. This itself is a new segment in the food and restaurant industry. Zomato indeed has created top-class technology-enabled platform. It has wealth of data at fingertips. Which cuisine is most popular in particular area of a city? What dish from particular restaurant has most saleable value? How Zomato can use the metrics and analytics like people around Chandni Chowk area have special fondness for chole kulche, and average order size is 400 rupees. Between 7 p.m. to 10 p.m. there is heavy rush of orders for Palwan Singh's tandoori chicken and special spicy deep in South Patiala because people like to enjoy their Patiala pegs like that. In North Nagpur, on Sundays between 7 a.m. to 10 a.m., there is highest orders for masala dosa and sambar. These are powerful data points and real-time information for anyone into food industry. Zomato's wealth of data on taste, cuisine and demand at various hours of the day and week is most valuable one for anyone into food and restaurants business. Zomato has worked on building powerful app. They have built a solid framework for food delivery and logistics. Zomato's next leg of growth will be all about how efficiently they monetize these wealth of real-time information. There is one segment in food business that is seeing innovations and disruption, that is cloud kitchen. There is IPO in lineup for one of the fastest growing cloud kitchen food company in India. Rebel Foods, which houses brands like Fasos, Berus, Oven Story, has built up a full-fledged cloud kitchen business and they are now in a position to scale it up rapidly. Zomato has upper edge if they spread their arms around cloud kitchen segment. Zomato can leverage their wealth of information and data in multiple forms. Each micro segment can be a separate business. People who are interested in investing in Zomato for long term can't do it just based on present fundamentals or finances. Zomato currently is a loss-making entity. People who are investing today are doing it based on its future vision and growth prospects. There are multiple examples of technology companies who were pioneer in their segment and had exclusive first mover advantage. Google started a simple search engine, and it built up multiple businesses inside it over the period. Amazon started as book delivery web platform, now is amongst most valued firm in world. It built powerful businesses to generate steady cash flow. Internet companies with powerful platforms and wealth of real-time data have a lot of growth avenues. Zomato posted its first quarterly results after the listing. The losses tripled, revenues almost quadrupled, number of orders delivered increased. In spite of increased losses, investors liked the revenue growth and the Zomato stock closed almost 8% up after the quarterly results were declared. For stocks like Zomato, one needs to look beyond quarterly profit or loss statements. The key metrics for Zomato will be growth in the number of delivered orders, growth in revenue and progress on its other business verticals. Well, this was my personal perspective on Zomato's business model and its long-term prospects. Now, coming to question of what to do with shares allotted during IPO. Investors who received shares in IPO are indeed lucky ones. And I was not so lucky. There are two categories of people. Category 1 people are those who are only interested in listing gains. They would have already booked profits. They hardly keep shares for 1 to 2 days post-listing. Category 2 people are the ones who would like to be part of growth stories of some of the promising companies. Zomato certainly falls in the category of promising growth story. For people who have been allotted shares in IPO, rule should be pretty simple. For growth-oriented companies like Zomato, book profit on 50% quantity as listing gains. Keep rest 50% of the quantity for long-term holdings, but with positional stop-loss which can be kept at entry price. In Zomato's case, its buying price would be 76 rupees for IPO Listing. So can keep holding the 50% of shares with positional stop-loss around 78 rupees to 80. That way you are not going to lose any money on the capital deployed. For retail traders who are eyeing fresh entries for long-term holdings needs to put money in stages. A bit of price action knowledge is needed in such cases. Zomato listed recently, so there are not many technical pointers or data for price action analysis. Ever since its listing, it is trading between range of 140 rupees to 125 rupees. 125 has been acting as a strong support. Whenever it reaches support zone of around 125, check for bullish trend on smaller time frames for fresh entry. Below 125 it can take support around 115 to 116. The stock was listed around 116, and after that it made a low of 115. So next support level to look for fresh investments is around 115 rupees. Investors should never put entire money in single stock. Zomato can be added in small amounts and it can be part of a well-balanced diversified portfolio. The holding period for long-term investors should be minimum 3 to 5 years.